Today's event is especially relevant to us working in the public sector, whilst the legislation can seem to be targeting large private sector organisations. It equally applies to government departments, NHS trusts, local authorities and other public sector bodies. And with ever increasing scrutiny on public spending and procurement, the need for robust anti-fraud measures has never been greater. And whilst we have a strong history of anti-fraud activity across the NHS, we cannot afford to be complacent. Now, this webinar supplements the work that's already been undertaken or planned by MIAA's anti-fraud services to support client organisations. And so far, we've issued briefing papers, updated audit committees, held some board presentations, and included local proactive exercises on this subject area within anti-fraud work plans for the coming year. And likewise, the Counter-Fraud Authority have also been proactive in addressing this new legislation through their guidance documentation and webinars that they've also held. The aim of today's session is to cover what the offence entails and why it matters to public sector bodies, how the offence shifts organisational accountability, the central role of audit committee and boards and senior management in ensuring organisations are equipped to deal with this new legislation, and things to consider when implementing what are known as reasonable procedures, which may assist limiting any criminal liability from an organisational perspective. This isn't just a legal issue, it's a matter of public trust, because as stewards of public and taxpayer funds, we have a duty to ensure that fraud is not only detected, but actively prevented. We'll finish today's Q&A session with today's webinar rather with a Q&A session. So please feel free to submit any questions that may come to mind using the chat option during the course of the initial presentation. I'll now hand over to my colleague Paul Bell to begin today's presentation. Thank you.
Thanks, Darrell. If we can have the first slide, please, Kenza. Okay, we've got 10 slides in the webinar presentation, so I'll pick up the first 5 and then I'll hand over to my colleague Kevin for the last 5, and then we'll go into the Q&A session following that. So just by way of an introduction, we thought we'd provide sort of a quick overview. So Economic Crime Corporate Transparency Act 2023 reached royal assent in October 2023. Home Office produced guidance on it in November last year, 2024. We were waiting for NHS Counter-Fraud Authority to provide guidance on how it was interpreted in the NHS. That was issued probably around late June. Some of you may have attended the webinar that they ran in the middle of July. We then issued our corporate briefing on the back of that, probably late July. And obviously the offence comes into effect from the 1st of September this year. It's a corporate offence, so unlike a lot of what we normally deal with, which are personal or individual offences committed by individuals and prosecuted on an individual basis, this is a corporate offence. So this is an offence whereby the organisation, a health body in this instance, could potentially be liable. There is criteria in terms of headcount, turnover and asset levels in the legislation. But for our purposes in the NHS, it does apply to all NHS bodies, including trusts and ICBs. And the guidance also suggests from NHS CFA, it's going to apply to subsidiaries as well. So we'll come into that in a little bit more detail in a few minutes. A breach of the offence will result in the possible prosecution of the organisation. And because you can't put organisations in jail, the likely outcome would be a potentially unlimited financial penalty. There may be other penalties as well, so there could be increased regulation, there could be adverse publicity, individuals in the organisation who may have failed to put adequate procedures in place or follow those procedures if they were in place. Whilst they're not necessarily going to be prosecuted, there may be disciplinary action against them. So there's a number of impact and consequences as a result of breaching this particular offence. The organisation has to be an intended beneficiary of the fraud. Now that can be a direct or an indirect beneficiary, but the legislation and the guidance around it talks about having to be a beneficiary in some capacity. There is an element of confusion around what that actually means and what it looks like, but we'll come to that in a minute. And for the corporate offence to occur, so for an organisation to be prosecuted under the legislation, an associated person, we'll come to that in a minute, will have to have committed an initial or a base offence under other related legislation. So essentially an individual, an associated person has to commit a trigger offence to lead to the corporate offence being considered. There's a finite number of offences. They are currently listed under the Fraud Act, the Theft Act 1968. There's a couple of offences under the Companies Act 2006, I think it is, and there's also a common law offence of cheating the public revenue. So at the moment, those are the other pieces of legislation that would constitute the trigger offences. We've noted at the moment it doesn't include a bribery act, for example. The guidance says that there may be other base offences that could be added further down the line, so that may be one of them. And it also sort of really puts a focus on senior management having a responsibility for ensuring that those associated persons acting with or on behalf of the organisation do not commit the offence, and you do that by introducing reasonable procedures, and we'll look at what reasonable procedures consist of as well. Next slide, please. So a little bit of background to it. As I mentioned, it came in, well, the legislation was reached royal assent in 2023. Purpose primarily is tackling economic crime, improving corporate transparency, and enhancing the UK's reputation as a place to do business. It's quite a large piece of legislation. The bit that relates to failure to prevent fraud is actually only a relatively small part of it. It introduces anti-crime reforms to Companies House, which has long been seen as potentially a problematic area. For many years, we've sort of seen organised criminal groups purchasing existing companies that may be gone into liquidation or dormant, and then using their sort of previous trading history and client records and so on in order to commit long-term frauds, which are ongoing frauds against their potential victims. So it tidies up some of that legislation. It strengthens corporate reporting requirements, transparency around who owns an organisation, sharing of data relating to businesses as well, and increases law enforcement powers around seizing cryptocurrencies as well. Fundamentally, it follows the 6 principles set out in 2 other related pieces of legislation, the UK's Bribery Act 2010, and more recently, the failure to prevent the facilitation of tax evasion offences. So this is the 3rd really piece of legislation that has a failure to prevent element to it. And we'll talk a little bit about those as we sort of go through the presentation. Next slide, please. So what is failure to prevent fraud? In a nutshell, it's where someone connected with an organisation and what the legislation calls an associated person commits a fraud which is intended to benefit the organisation or a related body, so that could be a subsidiary company, directly or indirectly rather than just benefit the individuals, and where the organisation has failed to take reasonable steps to prevent that fraud from occurring. So what do we mean by someone? It can be an individual, or it can be an organisation, it can be a legal entity. There is no offence if the health body is the victim of the fraud. So this is where actually the health body is committing the fraud against a third party, either directly through an associated person working for or on behalf of the health body. So it changes a little bit of what we've done traditionally. We, as counter fraud specialists, normally look at preventing fraud against health bodies and against the NHS. This is where someone acting for or on behalf of the organisation may commit fraud to the benefit of the health body against a third party. What do we mean by directly or indirectly? I think that is an area at the moment where there is a little bit of uncertainty. We've had NHS Counter Fraud Authority issue some guidance in the last 7 days, and we will send a link out to that guidance. They've done a frequently asked questions update where they've compiled a whole load of questions that we put into them over the last few months, and they provided sort of guidance and responses. That was only published at the back end of last week, so we'll send a link out. You might want to have a look at that in a bit more detail. But it does talk about whether the benefit is direct or indirect. So was the fraud carried out with the intention of benefiting the organisation, or was it an unintended side effect or consequence of someone carrying out a fraud for personal benefit? The benefit only needs to benefit part of the organisation, so it doesn't necessarily need to benefit the organisation as a whole. It might be that it benefits a particular ward or a function or a department. that is sufficient to trigger the offence. And the benefit doesn't necessarily need to be financial. So we often think of fraud in a financial context. That doesn't necessarily need to apply in this case. It could be the benefit of an enhanced opportunity, or maybe winning a contract, or putting itself in a favourable position, or maybe avoiding some kind of sanction or oversight measures. So that could be the benefit. It's not necessarily a financial one. Next slide, please, Kenza. So who are associated persons? This also is sort of quite an interesting area as well. So I suppose in the basic sense, you would be thinking about somebody employed by an organisation. So a directly employed individual, but it could be subcontractors. It could be agents acting for on behalf of the organisation. It could be a subsidiary. It could be employees of subsidiaries. What it tends not to be, and where the Home Office guidance sort of makes this clear, is that we wouldn't normally consider a supplier of goods or services to a health body to be an associated person, because the requirement of the legislation is that it's an individual acting for or on behalf of the organisation, not providing goods and services to it. So that's something that we sort of need to bear in mind as well. There's a question that was asked, which you'll see when we issue the frequently asked questions link, as to whether a trust could be an associated person for an ICB. And it indicates there's a possibility that that might be the case. So a trust could be an associated person for an ICB. However, trusts are required to have their own failure to prevent fraud arrangements in place as well. So there could be some reassurance that there are levels of fraud prevention and reasonable procedures in place through related organisations. But I think the thing to bear in mind is that whilst another associated person or an entity might be required to itself meet the requirements of the failure to prevent fraud, so they may have a turnover of over 250 people or over certain thresholds in terms of assets or turnover, it might be that the associated person doesn't meet that requirement, but the organisation, the health body, will still need to think about it in that particular sense. So as it says here, certainly the guidance really focuses on it in an individual case-by-case basis. You would need to look at the nature of the relationship. Some relationships are possibly a bit more obvious than others. So what are the natures of the services provided? Who are they provided to and on behalf of? What's the contractual relationship in place? And whether the person is acting under the direction and control of the organisation. I think to point out as well is that the legislation specifically talks around senior managers, and it talks around senior managers in the context of what's known as the identification doctrine. And in a nutshell, what that means is that there are certain senior individuals in an organisation, in any organisation, whose actions, conduct, decision making are equated as being the actions and conduct and decisions of the organisation. So the individual embodies the organisation, and the organisation is embodied by certain key individuals, and it does particularly talk around senior managers. So that's something that we'd need to think about going forward in terms of, in an NHS context, who would that extend to, who's included in that definition and who might not be. Next slide, please. So what are reasonable procedures? So reasonable procedures are measures that the organisation has put in place to avoid being held liable for a failure to prevent fraud offence being committed. So I think there's two purposes really of reasonable procedures. One is to stop fraud from occurring in the first place, which is just generally good practice. That's what we do normally. But also it's about having reasonable procedures in place that should a case be brought or an investigation be carried out, that you potentially have liability mitigation in terms of, well, we did everything that we thought we could reasonably do and to prevent it, but this fraud just went beyond it. The individuals carried out, ignored the controls that we had in place and superseded them and carried out the offence. Whether procedures are going to be considered reasonable or not would only really be determined at court. So the case would need to be brought, it would need to go to court, and then the court would decide whether the procedures you had in place were reasonable or not. And the test for that is a balance of probability test. So they would just say on balance, is it reasonable that you had these controls in place or your controls were insufficient? However, There are 6 overarching principles which we look at, and these are very similar to what we've seen previously in the other 2 pieces of legislation where there's a failure to prevent element to it. Certainly back in 2010, 2011, when the Bribery Act came into force, these principles were in place then. So the work that we're trying to do with yourselves through MIA is really based around these sort of 6 principles. And in a few minutes, Kevin will talk in a bit more detail about what that actually means in practice. So it's a top level commitment. So we're talking to our boards, we're talking to our execs and non-execs, talking to senior management. We're looking to sort of put a message from the top to say what isn't and isn't tolerated in the organisation. We already do a comprehensive fraud risk assessment, but we're enhancing that to particularly look at how this particular type of offence might arise in an individual health body context. So we're expanding what we currently do around the fraud risk assessment process to look at how this offence might occur in an individual organisation's setting. We're looking at proportionate and tailored risk-based prevention procedures. We're not going to eliminate, we can't put controls in place that stop the organisation doing what it needs to do. So we need to look at what are the best prevention procedures that we can put in place that are likely to target this type of fraud from occurring and put mitigation measures in place. There's a real emphasis on due diligence. So when we talk about that, we're talking around, do we know who we're employing? Do we know who we're doing business with? You know, the associated person is somebody linked to the organisation and acting for and on behalf of the organisation. So do we know everything we need to know about them or their organisation? Are there any things we need to be concerned about? What controls do we put in place? So due diligence is a key element to this. Communication, what does that mean? Essentially webinars like this, presentations to boards, execs, non-execs, talking to members of staff, issuing guidance, issuing briefings, doing workshops, all that kind of stuff is really communicating and training to make people aware of the new offence and the legislation, how it might be triggered, what they can do to prevent it from happening, or at least limit and mitigate the consequences should that type of fraud occur. And then obviously monitoring and review, which is a dynamic process. So learning about what can we do to improve, what additional measures can we put in place. If we've had an incident, we learn from that incident and we identify what do we need to do differently. There's a program of work that we're putting together at the moment at MIA. There's probably about a dozen or so steps, key steps that we're putting in place. But as Kevin will talk about, that's not necessarily a definitive list because there is no definitive list of what reasonable procedures look like. So we will keep our eyes and ears open. If we spot good practice elsewhere, be that elsewhere in the NHS or beyond, then we'll come back to our clients and we'll enhance the arrangements and put additional measures in place. So on that point, just to sort of give a flavour of what this fraud might look like, some examples, I'll hand you over to Kevin and he'll talk you through that process.
Thank you, Paul. So I've got 2 examples to talk through. The first one is from the Counter Fraud Authority guidance, and this is where a member of staff manipulates performance data to appear as if targets have been met. So that may trigger performance-related bonuses for the organisation or funding, and potentially avoid NHS oversight if things aren't looking as good as they are. So essentially it's making the organisation look better than it is, or avoiding making it look as bad as it is. And the scenario talks about how there's a financial loss to the NHS and potential reputational damage. So some rhetorical questions. Who could commit this kind of fraud? We're anticipating it would only be senior managers. That's what the legislation says. In this situation, it could be a director of finance or chief finance officer, a head of department, say a budget holder, a directorate manager, that sort of thing. What would the underlying base fraud offence be? I think in this case, given it's a senior manager, it would likely to be Section 4 of the Fraud Act, which is abuse of position. You could also argue it's a false representation, but it's one of the fraud offences. And I guess one of the key questions is, would this senior manager, who's directly employed by the organisation, be aware of the failure to prevent fraud requirements? We're putting a suite of things in place to make sure that people within your organisation are aware of these things. We've issued a senior manager briefing. We've issued an all staff briefing. We're doing these webinars. I think it's reasonable to expect that a senior manager within one of your organisations would know about failure to prevent fraud requirements and fraud requirements in general. If we're talking about finance, as fraud specialists, it's finance who we deal with mostly. Is this a very likely fraud? The last Counter-Fraud Authority figures for 23-24 showed out of 6,000 fraud referrals, only 8 related to data manipulation. So it's not very likely, but it is one of their examples. In reality, is there a loss to the NHS in this scenario, or is it just moving funds between different NHS organisations? It's a bit of a grey area. So next example, please, Kenza. Thank you. So this is from the Home Office guidance, and we've tweaked it a little to make it look like it's in an NHS organisation. So in this situation, the NHS Trust is struggling to fill vacancies in a certain area, so radiographers or something. And as a consequence, there's shortages. They can't employ people, so they go to an agency and say, "Can you try and provide us some people who can work for us and do this role?" The agency is supposed to conduct the right to work checks on all candidates. It's organised by the interim staffing manager at the trust. And this scenario is where they collude so that they falsify documents to make it look like the person is eligible to work for the organisation. So that could be visa requirements or working in the UK, or it could even be qualifications. It's not clear. So as a consequence, the agency supplies some staff to the organisation who are ineligible to work at the trust. Again, a couple of rhetorical questions. In this scenario, who is the associated person? So is it the interim staffing manager, or is it the person at the agency? I would say it's definitely the interim staffing manager. They're a senior manager within the organisation, or it could be argued they're a senior manager. Whether it's the agency as well, that's a bit of a grey area within the guidance and the legislation. Is that agency providing services for and on behalf of the trust, or are they providing services to the trust? I would suggest they're probably in this situation providing for and on behalf of the trust, so they would also be an associated person. What is the underlying fraud offence in this one? Similar to the previous example, it's probably false representation, Section 2 of the Fraud Act. But you could argue that the staffing manager is senior, so it's an abusive position. To throw another spanner in the works, if that person was, it says this scenario is an interim staffing manager. So the trust, organisation might have all the reasonable procedures in place that we're suggesting. If that interim staffing manager has only recently been acting up to be staffing manager, they weren't subject to all the training that has been put in place, or they may even be an agency member of staff themselves. So whose responsibility is that? Is it reasonable to expect an agency staffing manager to receive the same training as a directly employed member of staff? It's complicated, and I think that's what the scenarios show. Next slide, Kenza. I'll summarise what we're doing for our clients. So we're trying to help our clients by putting things in place that help you say you've got reasonable procedures. So these webinars are part of it. There's great attendance to these webinars. We're running another one, and we may run more in the future as well. We're also going to try and speak to the boards at our organisations to make sure the senior leaders understand the implications of this new law. When we do our normal fraud awareness presentations, whoever we're speaking to, nurses, doctors, estates, whoever, there's always going to be a slide in about this new legislation. We've issued comms, we've issued an all staff briefing that's gone in newsletters, we've issued a senior leader staff briefing, and we will be doing, I should say, some of this stuff might already have happened at your organisation, but it definitely will be happening by the end of Q3. What are the key parts of it? Sorry, Kenza. Briefly, is we're doing a fraud risk assessment, and I've looked at the frequently asked questions issued by the Counter-Fraud Authority yesterday. 3 different questions were about whose responsibility is it to come up to do the fraud risk assessment exercise for this legislation. And on 3 separate occasions, the Counter-Fraud Authority says it's the organisation's responsibility and that'll be facilitated by the fraud specialist. So that's what we're doing. Next slide, sorry, Kenza. We are updating your anti-fraud, bribery and corruption policy. That is our responsibility as part of our requirements. We've also had to think about which other policies may need to be altered for this new fraud offence. And we've come up with those 4. I will say that, and as Paul said before, we are learning as we're doing this, and people might have better ideas than we've had, or say something we've not thought of. So we hadn't initially thought of the fit and proper person policy. A client came to us and said, do we need to alter this? And we said, yes. We're updating our guidance. We're issuing a chief executive statement to show this top level commitment. We're thinking about you identifying who is carrying out services on behalf of you, and putting together some communications to make sure they're associated persons of you. We need to make sure that they're not putting you in peril for this new legislation. And we're undertaking a local proactive exercise. We're calling it the gap analysis of what's required for this legislation, and that is basically the last 2 pages. Next slide, Kenza, my summary. So are we expecting a wave of allegations from the 1st of September? Absolutely not. I think it has been quite difficult coming up with some scenarios that fit the legislation. Paul's talked briefly about the Bribery Act that's been in place for 15 years. That also has a failure to prevent element, and as far as I'm aware, no NHS body has ever been prosecuted under that. The legislation is, this is one small part of that legislation. The NHS already has counter-fraud specialists. The public sector, to a degree, has anti-fraud measures. The NHS is in a great place. We're working with you to put reasonable procedures in place. It's not expected they were in place on the 1st of September. That's not reasonable. The guidance was issued quite late on. And as far as I'm aware, there's no inspection regime. We're playing our part, making sure you're ready. We'll proactively monitor what's happening in the NHS and beyond. And if something new happens, we'll let you know. And I guess the most important thing is what's reasonable to us and what's reasonable to you. No one knows whether that's right or wrong at the moment. That will depend on when there is eventually a court case, and that will help define what procedures are reasonable. So that's it, Kenza. Next slide.
Great, thank you both. That covers the presentation today. So hopefully you've all found that useful and taken on board some of the points that are raised there. We're now going to go to Q&A. So we have a question that was raised with us prior to the start of the webinar today, and perhaps it's something that our colleagues at Hill Dickinson could comment on. But the question is, do you need a successful prosecution of fraud against an individual to trigger the corporate offence of failure to prevent fraud?
Good afternoon, everyone. The answer is no, you don't. There doesn't need to be a successful prosecution. It may arise during the course of an investigation, but there doesn't need to have been a prosecution in order to trigger the offence.
Okay, that's great. And probably another one for you from Martin Pritchard from Shrewsbury is around, though effective, the legislation is effective from the 1st of September this year. Can fraudulent activity committed before this date be considered under the new legislation?
It doesn't have retrospective effect, but I anticipate that were there behaviours identified, if there were historic behaviours, I think that would possibly give weight to a more likely prosecution if they thought that there were sort of a history of continuing offences. So there is, within ECCTA, there is a provision that if you are cooperating with the investigation, that enforcement action may not be taken, and that, I think, might be one of the factors that would perhaps possibly be considered to be an aggravating feature that might make prosecution more likely than not if it was found that there was a history of fraudulent behaviour which would benefit the organisation.
Great, thank you. The next one's from Kay Wiss at Stockport, which is would really like to understand how NHS professionals sit with this and their responsibilities with their systems and processes. I suppose, Kevin, that touches on the example that you were giving a little earlier in your section of the presentation.
Yeah, it does, and I guess the answer is based on the interpretation of whether NHS professionals are carrying out services for and on behalf of you or providing services to you. I don't know, what do you think, Paul? I think probably they're providing services for and on behalf of NHS organisations.
Yeah, my initial reading of that would be that they would be an associated person. But I understand NHS professionals have got their own counter-fraud specialist, so I think probably have a conversation with your own counter-fraud specialist and then possibly pursue some legal advice in terms of that status. But I think, on my understanding of it, then they would be deemed to be an associated person, probably to quite a lot of organisations.
Kay, you've got your hand up there. Do you want to add something more to your question?
Yeah, thanks, Darrell. I think it's just I'm just a bit confused, and sorry if I'm being thick. So you said the bit about the associate bit before was where it didn't sort of, you didn't have to change anything on procurement or anything else. So suppliers don't fall into that, I suppose, because they're a bit of middleman. I just think probably, Darrell, through all of us, it just needs a bit more clarity, because if I look at what we've had at Stockport, you know, this is one of the largest areas of fraud where people have been able to go through different routes on NHS professionals because of perhaps some of the lack of the controls in their system. And I don't think I'm alone. I think there's probably other, you know, people who've had similar issues with professionals, and perhaps it's the system and process bits. So I think it would be really helpful to look at that as specific examples and advice as how this goes through, Darrell, really, because I know it's a complex area, but it is more about individuals then who are, and I know you're saying if you're not the victim, but they are a supplier for you, aren't they? So I think it just needs a bit more clarity, if that makes sense.
Paul, you've got your hand up there. Do you want to?
Yeah, just to respond to that. So, as I mentioned in the first part of the presentation, NHS Counter-Fraud Authority have put together a frequently asked questions. Now, that link is an open link. It's not a restricted area that's only available to counter-fraud specialists. So, following the webinar, we'll send that link out. And in there as well, they do say that the FAQ section is open and ongoing. So, I'm quite happy if we submit a question to them and particularly talk around NHS professionals and then see what response they give and guidance. But I think ultimately NHS professionals do have their own anti-fraud specialist, if I recall correctly. So I think that's probably a conversation that they're going to have to think of internally. But I think it would be good to get a steer from NHS CFA, given the scope and breadth of the work that NHS professionals do across the client base.
That's great. Thank you, Paul.
Next question is from David Wakefield. How will this impact upon the internal view of accounting adjustments at year end, valuation of assets, assessment of bad debts, accruals, etc.? Will it change the audit processes? Anybody want to pick that one up?
It's probably best for you, that, Darrell.
Well, yeah, thank you for that. I can't see really it's going to make too much of a difference to technical accounting adjustments. This is more about the kind of unless you've got a known potential fraud that impacts on one of those particular areas. But as a general rule of thumb, I can't really see how the legislation would impact. I don't know if, David, you want to elaborate on that a little further, perhaps?
Yeah, thanks. I mean, I guess you're right. If there's fraud going on, there's fraud going on. But I'm just conscious of the fact that every year, in every organisation I've ever worked in, there's a discussion between the auditors and the finance team in the first place around the valuation of certain things or the treatment of certain adjustments that can swing you from profit to loss or vice versa. And I just wondered, given this new legislation, whether or not those discussions will take a slightly different flavour to them, in the sense that will the auditors be more cautious than ever before on the way we treat certain adjustments?
I think that's probably a question for external audit. It's a good question. And I'll flag it. I'll make a note of it and flag it up with our colleagues from external audit and see if we can get a general response on that in terms of whether it will impact their approach to the planning of their audits. So thank you for that, David, and I'll pick that up and we'll feed it back to delegates once we get a response. Thank you.
Thank you.
Anna has raised the question: failure to disclose in register of interests, pecuniary and non-pecuniary. I don't know, Anna, if you want to just elaborate slightly more on that, and then we can direct it to one of the members of the panel. No. Okay. I'm not quite sure what the question is that's being asked.
Just read the question again, Darrell.
It just says, well, it says failure to disclose in register of interest, pecuniary and non-pecuniary.
So this is non-declaration of somebody who might have an undisclosed interest. So normally we would view non-declaration of interest under a Bribery Act consideration. That's normally where that heads, as opposed to a Fraud Act. I think we need to look at the particular circumstances, but the most, was that a follow-up that popped up?
I think it is, yeah. The most basic way of disclosing a non-disclosed, basic way of disclosing a non-disclosed interest.
Yeah, I'm not 100% sure at the moment whether that would necessarily trigger a corporate offence. I think non-disclosure in and of itself isn't necessarily a fraud offence. It might hide a fraud offence, or it could lead to a fraud offence, but I think the non-disclosure would be an internal matter, and then it would need to be investigated to identify whether there was a fraud related to that non-disclosure. But I don't think non-disclosure in and of itself would necessarily trigger the corporate offence. That's my understanding at the moment.
Okay, thank you for that.
I think I'd agree with that, Darrell, just to come in. I think I'd agree with that. And I think the other thing probably is what the thinking was behind the non-disclosure, whether it was deliberate, accidental, etc. Because I think that would go to the thinking as well about whether there was actually an offence, an underlying offence committed by that. Because as we know, there are lots of instances where circumstances aren't disclosed, but not necessarily because people are looking to commit fraud. So I think it would depend on the individual circumstances, as you say.
Great, thank you. Next question then from Grenville. I don't know, Grenville, if you want to just talk to this question.
Yeah, hi everybody. It was probably more of a broader question, not just in terms of the NHS, but in terms of general settings. And it was about where we have organisations produce, as we often see, exaggerated business plans and delivery promises that may result in various funding streams that end up being unjustifiable or not value for money. And in other sectors, maybe sort of in housing or business, where people are seeking additional corporate funding and making significant promises that again are largely known to be not achievable, and where that stands. And I'm also thinking in the context of increasing collaboration within the NHS between organisations, where there may be promises to deliver and flows of money on the same sort of basis. Could that be caught up in this?
So, Paul, do you want to pick up on that one?
Yeah, so I think the difference between being overly optimistic on your business planning and whether you are intentionally providing false representation as to circumstances and ability to attain certain targets, I think that's going to be the key to that. And obviously for there to be a trigger fraud offence that would trigger the corporate offence, you need to prove dishonesty. So I think that it probably points more towards increased scrutiny of those business plans and the targets and how achievable they are. And then also as well, on the other side, once those plans have been submitted, what the scrutiny and interrogation of those plans are by the funding holder in terms of, do we accept them? Are they overly optimistic? I think all of that would need to be unpicked before you could necessarily go down the route of saying, you know, we deliberately submitted false plans in order to attract particular funding. I think it kind of links back to sort of data manipulation, really. And it's a question of whether, are you falsifying data to make the situation look more positive? So is there underlying data that you have then manipulated, as opposed to, are you overreaching for targets, but that's not particularly based on anything other than a feel, an instinct, patterns, trends, and so on. I think the key trigger as to whether that would fall or trigger the corporate offence would be whether there's an element of dishonesty in the submission of those plans. And one of the reasonable procedures that you would put in place is the scrutiny within the organisation to say these plans are robust or not, and then from the funding body side that has to make a decision whether they fund that level of planning, what their scrutiny looks like as well, really. So those would be the reasonable procedures that should mitigate that turning into a fraud offence.
Thank you.
I think that's probably the last of the questions on the chat options. I don't know if anybody else has, anyone here has got any further questions they want to raise. No, I can't see any hands. Okay, that's great. So I think what I'd like to say at this point then is to thank you all for joining us today, which is, well, I'm sure you'll agree, has been an important discussion on the failure to prevent fraud offence. And as we've seen, this provision, isn't just a legal technicality. It's a reminder for NHS organisations of the need to take proactive preventative steps against fraud. For public sector bodies, we all operate in a landscape where public trust is paramount and where every pound spent must be accounted for with integrity. And the offence challenges organisations to go beyond reactive investigations and to further embed fraud prevention into the very fabric of the governance of the organisations that we work for. As we leave today's session, I'd probably encourage you to reflect on probably three key areas. One is understanding who within your organisation could be considered to be an associated person, and how your organisation might fall within the offence's reach. And Kevin has given some examples of how that could occur within the NHS. I think it's important to assess current fraud controls, ensure that they're documented, they're tested and proportionate to your risk. And as Paul touched on, and Kevin touched on as well, we will be doing an enhanced risk assessment with you during the course of the remainder of this financial year. And I think it's really important as well to talk about the culture of prevention, to foster an environment where prevention is everybody's responsibility within the organisation, not just with senior managers, but at all levels throughout the organisations that we work with. As has been touched on, we'll be sharing further follow-up and guidance with you to help support you to take the next steps in ensuring that you do have adequate procedures in place. And on behalf of our panel, I'd like to thank you again for your time and engagement in today's session, and hope you all have a very good afternoon. So thank you very much.